Hello everyone, this is Ryan Mallory for SharePlanner.com. Pretty tricky day in the market. You had in futures overnight, on Sunday night when it opened up at 6 p.m. Eastern, market went like 10, 13, 17, 18 points down on the S&P. Then as the night wore on, you saw this nice recovery. And by the time the market opened, rolled out for equities, you saw a S&P that was only down 3 or 4 points. And then actually for most of the day, I mean, despite the early hour of trading where it was whipsawing all over the place, you actually had a pretty good recovery. Now, a lot of people hang their hat on the idea that we sold off going into the close, and that's very true as well. So let's look at what we saw. I'm going to pull up SPY. And here on the 5-minute chart of the SPY, you have what I outlined earlier in the day, a head and shoulders pattern. So you have the left shoulder, followed by the right shoulder here, and then the head up here. Now the key is whether it can break the neckline of this pattern, because you see a lot of head and shoulders patterns oftentimes that never fulfill. Instead, they become a solid support level to keep bouncing off of, like it did these previous 2 times. But once it breaks down, like you saw here in the final close, then okay, you have a full-fledged head and shoulders pattern. So what does that mean to tomorrow? You could definitely see that filter into tomorrow's trading. That's on a 5-minute chart, so on a day-to-day basis it's usually not as strong. I would look more towards the 30-minute chart on the SPY. And here you had this humongous SPY head and shoulders pattern from the past week or two that played out beautifully. But now I would say this pattern's pretty much done. Okay, this is really a relic of the past. What you have now that you're dealing with on the 30-minute SPY chart is a bear flag pattern. So by its very nature, bear flags means they're bearish. So the assumption is, and we confirmed the bear flag pattern at the close today, that it's probably going to go lower. So, looking at futures tonight, not any real clear direction so far with the futures. Let's look at the daily. And this is really what I'm paying the closest attention to. And it changes daily because it is a rising support level. So today it was 1368 on the S&P. On the ES it was more like 1365, 1364. But if we break below this, okay, and we close just a smidgen above it, okay, if we break below this, I think you got a few support levels you want to watch for. First of all, and you hope it just stops right here if you're a bear. Okay, but it could go further, and you could see this thing really get out of hand just by looking at a couple of different support levels. It could dip to sub 13. I mean, this market is very prone to rip 20, 30 points off in a day. We haven't seen any down 30 points yet on the S&P on the year, but that doesn't mean it can't happen. I mean, you look back at last August, and we were seeing 80-point down days. So don't take this stuff for granted, like we can't go sub 13 in a matter of days, because we definitely can. You have these anti-austerity governments in Greece and France now. People do not want to be bailed out. People don't want to bail out somebody else, so that weighs heavily on the markets. And you basically got like a quasi double top here. If you don't want to call it a double top because it doesn't go all the way up to 1405 and it only goes up a shade below that, you can call it a inverse cup and handle pattern. But needless to say, there's a lot of support levels. I mean, I can draw lines all day long that are in play here. You have this support level where you've tested it multiple times. We finished a shade above it again today. If you were to look at futures last night, you would assume that we were going to be far south of where we ended up the day on. So this was a victory for the bulls. I know I have a bearish tone to what I'm talking about, but I'm trying to show you the possibilities, what you need to be aware of going into tomorrow, Wednesday, Thursday, Friday, and the weeks ahead. All right, but it was a victory for the bulls because here we were 17, 18 points down the S&P, and we finished like in positive territory. Okay, I think anybody that saw the futures last night and was hoping for some kind of bullishness out of that would have taken any day of the week a bullish recovery by 4 p.m. Eastern. So, and that's what we got. So it is what it is, and you got to take it as that. Now let's go ahead and look at a couple of the trades. I made one in DF today. I thought that actually the market could wind up being like anywhere from 1 to 1.5% higher on the day. Just based on how much strength there was in that recovery overnight, I thought it would just reinvigorate the bulls to keep pushing the market higher and higher. I've seen that happen plenty of times. Didn't quite get that, but like I said, it was still a great day for the bulls because it could be looking at a 18, 19 point down day, and they're not. So I got in DF at about 12.44. Didn't work out. Get out at 12.34 for a 0.7% loss. Take that any day of the week. You can always recover from small losses, very much so. But you could see here, I mean, this was a good trade to take. I mean, I don't regret taking it one bit. It just didn't work out, and the market was choppy, and that doesn't help it either. But look at this beautiful resistance level. Breaks out. Okay, I think I'm onto something. Boom, it head fakes. I'm done with. That's why I don't like to put all my eggs in one kind of trading style, because breakouts are pretty easy. They're pretty easy to understand, but you know what? There's a lot of days where breakouts just do not work. You get head fakes, okay? And so if you're a long-only trader, it's not the best thing to just only be a breakout player. It helps to buy on pullbacks and dips and to trend lines and to buy at support levels and sell at resistance levels. So DF didn't work out. Now let's go ahead and look at Lulu here. I really like this. You had a beautiful breakout last week on the stock. It pulls back. People who brought in the breakout probably frustrated at this point because they're going to say, well, you know, I got in around 77.28 and I could have gone out at 79 plus for a decent gain, and instead I'm at break even at this point. But support hasn't been violated yet, and you know what? You got multiple support levels at work here, and it works really good. So you can see here, short-term support level looks solid. All right, I got in around 77.70. It's at 77.28, so I'm down about 2/3% or so. Nothing really I'm worried about at this point. If we bounce tomorrow, this will be in good shape. I'll be thrilled. Moving on from Lulu to BZH. I bought this at the end of the trading session. I did not use a full position size on it, more like half a position, or even less than that actually. Double top. I actually went along on this because you have multiple support levels that it's testing right now. So I want to see tomorrow if we get a market bounce, and that very well could happen. You got support here, 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 and then we're testing it again. So 4 different support levels. I want to see if this thing can maybe ride up to 280, 290 tomorrow. I'll get out. Ideally, my target price is going to be somewhere around 290-ish. You see there where you got resistance all over here? That's where I want to get out at. Stop loss is going to be 262. So I'm not risking that much. I mean, risking essentially about 7 cents on the trade. I got in at 270. If I get stopped out at 262, I sell it, move on to the next trade. Now, let me tell you, this is definitely a hard market to trade in right now. I mean, if you're getting stopped out of positions, both long and short, don't get too upset at yourself. That's happening to a lot of traders. Direction is very difficult to determine right now because one day is up and it looks like the market's finally going to bounce, and the next day, boom, you're getting hit with a futures opening that's down 20 points. So don't beat yourself up too bad if your trades aren't working as well as they were, like, say, December through March time period. Because it's a totally different market. VRX, this is a short that I added today. look at that sell-off. Okay, I didn't get in at that point yet. I wish I would have. I wish I would have had the nerve to get in when it's at plus 58. But there is no edge there. No one knew that thing was going to sell off like that at that point. But what we have is a solid rally into resistance, like a 2% rally or so. I get in about 52.19, so I'm up a shade on this one, okay? And the chart that I posted earlier today for it is right here. So what you have here is resistance holding. Did a great job today of that. I got my stop loss at around 54.24. So if it does run against me, I'm not gonna stay in it long. And there's a very real possibility this support level here is reached, in a week or so if the market sells off. So this is like a hedge against my existing longs. Also still have H-band, which broke out nicely a few days ago, but is still struggling a bit. But it's holding its own, man. I mean, I tell you, it looks like during the day it could cave in, but it recovers nicely into the close. This support level is important for it to hold, and almost got stomped out of it the last 2 days, but it's staying strong. So I'm going to hold it overnight once again. And then the last position I got is VAR. VAR is a short position that is playing out very nicely. You got a double top here, right there, and right here. So it breaks it, had a nice little rally back into resistance, and resumes the sell-off. So this one as well, I'm continuing to hold. I like it. I mean, you can see there's resistance all over the place here. Going back to March. I mean, going back to May. I mean, the resistance is everywhere. Back in January through February, and then again here in May. So I don't feel in a rush to get rid of this one at all. One last thing worth highlighting is USO. And oil is just continuing to plummet. A lot of times this has to do with fears of a weaker economy, and if you have weaker economy, people aren't going to be buying gas, etc., etc. So this is probably more of a sell-off more than anything on fears of further market weakness, and it's usually a pretty good telltale sign of where the economy could be going here. And you can see here though that it bounced somewhat today. I mean, finished down a good chunk, but it found some support here. I mean, there's support right around in here from last October, then again in November, January, and here we're testing that same support level in May. So I may go ahead and buy myself some USO tomorrow, as close as I can to that $37 level, and see if I can get a bounce out of it. Maybe try to fill this gap at around 38.50, make a nice trade. I highly recommend that you guys consider doing the same. Alright, that's going to be it for now. If you guys have any questions, feel free to hit me up with an email at ryan@shareplanner.com, or jump in our chat room, ask me any questions that you have on your mind. Take care now.